We are doing MCQs related to ratios. Okay. Can you please read the question?
Yeah. Business received a 5-year loan of $40,000. The loan was paid into the bank current account. What was the effect of the loan?
Hmm.
So current ratio this will have no effect. No. Because it's a
Loan is
non-current
paid
liability.
into the bank current account, no?
Acha, हाँ.
Bank current account means the current asset will
Current
increase.
assets increase, yeah.
That means the bank balance will increase.
Hmm.
Hmm?
Yeah.
So bank balance will increase, so current ratio will increase. So it can either be C or D.
Yeah.
Now, if my capital employed increases,
Hmm.
okay, if my capital employed increases and there is no increase in profit,
Hmm.
then the return on capital employed would decrease.
Yeah.
I increase my capital employed, but immediately I'm not going to get any return. In
Yeah.
fact, I will be paying the loan also.
Hmm.
So the return on capital employed will decrease.
Decrease.
So it is option C.
Hmm.
Okay.
Yeah.
Can I go to the next one, please?
Yeah.
What do they want?
They want the profit margin after correcting an error.
Okay.
So the draft financial statements of a business for the year ended 30th June included the
Closing
following.
inventory was understated.
Yeah.
Means income was understated.
Hmm.
If I correct the error, I have to add back to the income.
Yeah.
So gross profit would be,
70,000.
so gross profit margin would be,
70,000 upon 280,000 into 100.
okay. It will become how much?
One sec. It will become 25%.
The option is D. Go to the next one. Capital employed. What is the meaning of capital employed?
It is total assets minus current liability.
Okay, total assets minus current liability, or else
Some debentures plus.
capital plus non-current liability.
Hmm.
Okay, fine. Return on capital employed is being given to me.
Yeah.
Given sales, have been given debenture interest paid,
Hmm.
gross profit margin, operating expense to revenue, and return on capital employed.
Yeah.
I know sales minus cost of sales is going to give me what?
Gross profit.
Gross profit minus other expenses is going to give me profit before interest and tax.
Yeah.
Minus interest. Okay.
Yeah.
Another thing, what is the formula for ROC?
Profit from operations upon capital employed.
Upon capital employed into 100.
Hmm.
I want to find capital employed.
Yeah.
So they've given me 16%.
Yeah.
If I get the profit from operations, I can get the capital employed.
Yeah.
I'll get the profit from operations from here.
Hmm.
Come on, start.
So
Sales
sales
is 1,600,000, right?
yeah.
Gross profit margin is 20% of it.
Yeah. So we.
It's going to be 320,000. Yeah.
Yeah.
Operating expenses is 12% of the revenue.
Where is this given? Okay.
To 12%. So operating expenses
190.
38,200. 200.
90.
two hundred. Yeah.
Hmm. Yeah. 190. 200. 200. 200. 200. 200. 200. 200. 200. 200. 200. 200. 200. 200. 200. 200. 200. 200. 200. 200. 200. 200. 200. 200. 200. 200. 200. 200. 200. 200. 200. 200. 200. 200. 200. 200. 200. 200. 200. 200. 200. 200. 200. 200. 200. 200. 200. 200. 200. 200. 200. 200. 200. 200. 200. 200. 200. 200. 200. 200. 200. 200. 200. 200. 200. 200. 200. 200. 200. 200. 200. 200. 200. 200. 200. 200. 200. 200. 200. 200. 200. 200. 200. 200. 200. 2
30,400. So profit before interest and tax would be 281,600.
But miss, operational expense is 12% of revenue, na? But I'm getting my answers.
So our operating expense was 12% of the revenue. If I say 12% of 1,600,000 is 192,000. So
Hmm.
profit before interest and tax is 128,000. I
Yeah,
need this profit only, right?
yeah,
So profit before interest and tax is 192,000.
yeah.
My capital employed would be
Uh,
192,000
divided by
divided
16%.
by 16%.
So it'll be 800,000.
So it would be 800,000. So the answer is option C.
Hmm.
Okay.
Hmm.
Can you read the next one, please?
A company has calculated inventory turnover periods for 2 successive years. Company directors have suggested the following reasons for change. For
Hmm.
the change, purchases have decreased, purchases have increased, sales have decreased, sales have increased.
Hmm.
So inventory turnover in days has increased.
Inventory turnover period in days. That
Hmm.
means now it is taking me more time.
Time to sell it.
More time to convert inventory to sales.
Yeah.
So when will I take more time to convert inventory to sales? Either I'm purchasing more
Hmm.
or I am selling less.
Or you're selling less.
So
Yeah.
purchases have increased or sales have decreased.
Hmm. So it'll be C.
E. Option 2 and 3.
Hmm.
Go to the next one.
Hmm. What is the trade receivable turnover?
So it would be
Trade receivables upon credit sales into 365.
okay.
So trade receivables are 16,000 upon 220,000 into 365.
Hmm.
So 26.5. So 27 days.
Are you sure?
Yeah.
Okay, go ahead.
In the last financial year, R Limited had
What
sales revenue of
do I need?
190.
What do I need?
Sorry. What would the operating expenses to revenue ratio be if the additional advertising took place?
I need to find out the operating expense to revenue
Percentage to
ratio.
revenue ratio.
Okay, read now.
In the last financial year, R Limited had sales revenue of 190,000 and operating expenses of 108,000.
1
In
minute.
the
Huh?
hmm,
Sales revenue of 190,000 and operating expenses of
190,000.
108,000.
Yeah.
Hmm.
And revenue of 100 and 190,000.
Now read ahead.
Oh, I thought you were calculating it. In the current financial year, the directors think that if they increase spending on advertising by $5,000, the sales would increase to $205,000.
Hmm.
Operating expenses, excluding advertising, would increase by $7,000.
Hmm. So directors think that if they increase spending on advertisement of 5,000, so
Hmm.
operating expenses would be 108,000 plus
Plus 5,
5,000. So
plus
sales
7.
would increase by 205,000. Now operating expenses excluding advertisement would increase by 7,000.
Yeah,
So now another 7,000 would also increase.
yeah.
Okay. So what is the operating expense to revenue ratio now?
It is 58.54.
Sorry.
58.54.
So what would be the operating expense to revenue ratio if additional advertisement took place? So this is additional advertisement,
Hmm.
and this was the extra increase excluding advertisement. You calculated it, right?
Yeah, I calculated it.
So the answer is option B.
Hmm.
Go ahead.
What was the inventory turnover?
Formula.
Average inventory upon cost of sales into 365.
Are you sure?
Wait, whatever's bigger. So is it cost of sales upon average inventory into 365?
Yeah, I thought it is that only. Cost of sales over average inventory into 365. What is the cost of sales?
We need to calculate it.
Okay, average inventory you can calculate, right?
Yeah, average inventory is 60,000 plus 80,000 divided by 2. So it's 70,000.
Cost of sales would be opening inventory
Yeah,
plus purchases plus carriage inward. Return outward is purchase return, right?
yeah.
So minus purchase return minus closing inventory. So what is purchases? Total purchases
Second,
820,000 plus
50,000.
740,000 minus 40,000. Yeah? Are you
Yeah,
with me?
yes.
So it is how much?
76,000.
Nonsense.
Yeah.
I asked you what is purchases?
Acha, purchases you asked me. So it'll be 820,000 minus 40,000.
Okay, 20,000 minus 40,000. So it's coming
780.
up to how much?
780,000.
780,000.
Yeah.
What is opening inventory?
Opening inventory is 60,000.
Carriage inwards
20,000.
and closing inventory 80,000.
Right.
Okay, so 80 and 80 wipes off.
Hmm.
So 780,000.
Yep.
So what is the answer?
One sec. 780.
No, it is average inventory over cost of
Oh,
sales.
sales, yeah. It's 70,000 upon 780,000 into 365. 32.75. So 33.
Go to the next.
A business has a rate
The
of inventory.
inventory turnover ratio in times the thing is cost of sales over average inventory.
Yeah.
What is the numerator in calculation?
Average inventory.
Hmm?
Average inventory. No,
How?
sorry. It is cost of sales. C.
Hmm?
Yeah. C. Cost of sales.
1 minute, continue. So it would be cost of sales, okay?
Yeah.
Go to the next one.
What was the return on capital employed for the year?
How do you calculate return on capital employed?
Profit from operations upon capital employed.
Okay, profit from operations upon capital employed. How do you get capital employed?
Uh,
From operations
total
is your
assets, total assets minus
profit from operations
65,000.
upon capital employed.
Yeah.
Profit from operation is your capital employed.
Yes, so capital employed will be 1350 plus 140.
900 capital plus general reserves plus long-term loans plus retained earnings.
But
Yeah, you
yeah,
have all of it, na? Capital plus non-current liability.
but I can also do total assets minus current liability.
But you can also do this also. Check again. Total assets is how much?
Yeah, 140
3050
plus
plus
one.
140,
Yeah,
40
1490.
minus 90.
1,400.
1400. Otherwise,
900 plus 150 plus 200 plus 150. 1400.
yeah, so you can do anyway.
But it's easier.
Come on fast. Give me the return on capital employed.
It's 4.64.
2.64 option B.
Yeah.
Come on. Read fast.
Hmm. Which information from Sybil's financial statement is of greatest interest to Gordon?
Hmm.
Gordon sells goods on credit to Sybil.
Hmm.
So, so her current ratio,
You read, I
because
just come.
yeah,
Tell
Gordon
me.
sells goods on credit to Sybil. Which information from Sybil's financial statements is the greatest interest to Gordon?
Gordon is selling
Yeah,
on credit.
yeah.
So if she's selling on credit, what does she need to know?
The liquidity of the other person's business.
If she's selling on credit, she needs to know the liquidity. If
Yeah,
she needs to know the liquidity, that means she needs to know the ability to pay.
yeah.
So for ability to pay, it is the current ratio.
Hmm.
Go ahead.
Yeah. Which actions would in general improve the asset test ratio of a business in the short term?
What is the asset test ratio?
Current assets minus inventory upon current liabilities.
Okay, current assets minus
Minus
inventory over
upon
current
current.
Over
liability.
current liability.
Yeah.
So which actions would lead to improving the asset test ratio in the short run?
A
So
reduce of current assets.
So it won't be
decreasing
that
trade payables,
would
does
increase
it
current
reduce?
liability. No.
I want to improve the asset test ratio.
Hmm.
So if I am delaying trade payables, that means neither cash is going, neither the liability is reducing. It is not going to improve my asset test ratio. It is not going to improve the current ratio. If I
Hmm.
am selling inventory, current asset is going up and inventory is not counting. That means the numerator is rising.
Yeah.
So this will help to improve the asset test ratio.
Hmm.
Selling surplus non-current assets, again cash is increasing.
Yeah. So current asset will increase.
So current asset is increasing. So 2 and 3 both option is correct. I have only this, so it's option B.
Yeah.
Okay.
Hmm.
Go ahead. I will give you time. You all will solve 5 questions yourself.
Okay.
Okay. Come on, tell
Yeah.
me.
Her business had current liabilities of $4,000 as at its year end. What was the value of inventory held at the year end?
Okay. How will you do it?
So first you will do current ratio is equal to current asset upon current liability. You will
Current
write
ratio is current asset upon current liability. So
that
2.25.
2.25 is equal to like X upon 4,000. Yeah.
So current assets is 2.25 into
Into
4,000.
4,000. So it's 9,000.
Current assets is 9,000. Okay. Then,
Then I'll do asset test ratio.
hmm,
1.5 is equal to 9,000
current
minus
assets minus inventory over current liability.
yeah,
So
1
9,000 minus
minus
inventory over.
inventory upon 4,000.
Okay.
So
So
1.5,
1.5 into 4,000 is equal to 9,000 minus inventory.
yeah. So 6,000, it's 6,000 is equal to 9,000 minus inventory. So inventory will be 9,000 minus 6,000. So it's equal to 3,000.
3,000. I got A.
You get it at the end time after everything is done.
No, miss, I used a different method. I was just confused.
Okay, fine. So your inventory is 3,000.
Hmm.
Return on
Yes.
capital employed.
Yeah.
What is the formula for ROCE?
Profit before interest and tax divided by capital employed.
Profit from operations over capital employed into 100.
Yeah.
Profit from operations is over here.
Yes,
84,000.
84,000 divided by. Miss, the
Capital,
formula for capital is current asset.
it
What's
can
the formula?
either be total assets minus current liabilities, or it
Okay.
can be capital plus reserves
Hmm.
plus non-current liability.
Okay.
So I have capital, I have reserves, I have non-current liability. I have
Yeah.
all the
Okay.
three. So it is 200,000 plus 157,000 plus
Hmm.
130,000.
Yeah.
It is 487,000 in
Hmm.
200. Can you give me formula for ROCE?
Profit before operations. Profit from operation divided by capital employed into 100.
Yeah.
Yeah, answer is 17.25.
17.25.
25.
Answer is option B. Can you go to the next one?
Yeah. A business has a gross profit margin of 25% and we are supposed to calculate the purchases for the year.
Hmm.
We will do sales minus cost of sales will give you gross profit. Sales is
Better.
200,000. Hmm.
Sales minus cost of sales will give you gross profit. I have to find purchases.
Hmm.
Sales is 200,000.
And gross profit margin is 25%, so it's 50,000.
25% of 200,000.
Hmm.
50,000. Cost of sales will become 150,000.
150,000.
Cost of sales is made up of
Opening
opening,
inventory plus purchases minus
purchases
closing.
minus closing.
Yeah.
This is 150,000.
Hmm.
Opening is 10,000. Purchases I don't know. Minus closing 5,000.
So purchases is
50,000
145.
plus 5,000 minus 10,000. You go reverse.
Yeah, 1,45,000.
1,45,000.
Hmm.
Go to the next one.
Okay. Which ratios would help Raj decide whether or not to supply goods?
Okay.
So
Whether or not if I want to see I should supply goods or no. What will I do?
the current ratio you will take into consideration.
Okay.
Non-current asset turnover, I don't think you need to
So whether
really
or not you want to supply goods or no, for
so
that I need to see whether the person is paying the trade
thing.
payables on time.
Yeah, so it will be trade payable turnover and current ratio.
Ratio, whether the person is paying the trade payables on time and
Hmm.
whether the person has enough solvency to pay.
Hmm.
So it would be 1 and 3, option B. Yeah,
Yeah,
come on. Next, trade payable turnover ratio. What is the formula for trade payable turnover ratio?
it's
Uh,
trade sales upon credit sales into 365.
Credit sales.
Credit purchases under 365.
Yeah,
Credit
credit.
purchases into 365. What is
Hmm.
trade payables?
It is 80% of the purchases.
Trade
So,
payables. Trade payables.
yeah, sorry, 46.
Trade payables is 46,000. What is credit purchases?
480.
80% of 600,000
Yeah,
because 80% are on credit. So 600,000 into 80%. So 480,000
yeah,
to 365. What is the answer that we are getting?
34.97, so 35 days.
Farhan, are you sitting with a calculator?
No,
Why?
certainly called for meetings. I just joined.
Go get your calculator and come.
Yes.
What is return on capital employed?
Hmm.
Come on.
Profit from operations is 11,
Profit from operations
59.
divided by capital employed into 100.
Yeah.
Two ways to find out capital employed is total assets minus current liability
Right.
or capital plus
Plus non.
reserves plus non-current liability. I don't think I have the capital.
Yeah, we have the total assets and this thing.
The profit from operations is how much?
11.
Capital employed.
We'll do
Total assets
59
is
plus 50
109,
minus
40,
8. So it's 69.
69 into
11.
100.
Yeah.
So
It's 15.9.
11 divided by 69 into 100. How much?
15.9 for so 15.9.
Option D.
Hmm.
What were the owner's drawings for the year?
Yeah.
Read the question, please.
A statement of financial positions at the end of a financial year showed the following information. Capital at the start of the financial year was 19,100. The
1
profit for
minute.
hmm,
Hmm.
the profit for the
Profit
year
for
was
the year was 9,200.
yeah.
How do you get capital at the end? Drawings will come over here.
Yeah, drawings will come here.
And capital at the end would be here.
We'll minus the
So all
total
the debit,
minus all the credit.
all the debit minus all the credit.
Hmm.
What is the capital at the end?
18,000 plus 3,000 plus 1,800 minus 3,600 minus 350. It's 18,850.
What is drawings? 19,100 plus 9,200 minus 18,850. Drawings is 9,450.
Yeah.
Option D.
Hmm.
Go to the next one.
A company provided the following information.
Trade receivable turnover ratio.
Hmm.
Trade receivables.
Upon credit sales into 365.
Answer.
24,000. Wait. No, not 24,000. Sorry. 4,100 upon 27,000 into 365. So, 4,000.
So,
1 second. Calculate. It's 55.42. So, it will be 56.
I think this topic is quite easy.
Yeah.
Return on capital employed. How do you get return on capital employed?
No profit from operation upon capital employed. So,
Okay, profit from operations is
128,000
capital employed.
non-current liabilities are
Net
given to us.
current assets is given to you, right?
Yeah.
What do you mean by net current assets?
So, um, what is net current? The total current assets, na?
Net current assets?
I don't know.
Farhan,
Yeah.
net current asset means current assets minus current liabilities.
Huh.
Return on capital employed is profit over capital employed into 100.
Yeah.
So capital employed you either get by the formula total assets minus current liabilities.
Or
So this is total assets minus current liability.
yeah.
Okay, net current assets is what? Current assets minus current liability.
Yeah.
This is 512,000. Okay.
Okay.
Hmm?
So Miss, that's also a formula. Non-current assets minus current assets.
Hmm?
So non-current assets plus current assets minus current liability will give us capital employed.
Hmm, 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 hmm.
Okay. Okay.
Okay. 1 minute. So the answer is option D. Now take 5 minutes and try 5 sums.
Yeah.
Read the question.
What does return on capital employed measure for a business? Efficiency to generate profit from its total assets? No.
Return on capital employed gives the efficiency of the business to generate profits by using own funds and outsiders' funds.
Okay.
Yeah.
Yeah.
So it gives you profits by using what? Total assets minus
Yeah.
current liability.
Yeah.
Not total liability,
Hmm.
not non-current assets. So
So
generate
it's
profits from own funds and borrowed funds.
Yeah.
So the answer is option D.
Hmm.
Next one.
What was the inventory turnover in days?
Okay. Inventory turnover in days would be average
Average
inventory
amount on cost
or
of
cost
sales
of sales into 100.
into
Average inventory would be
365. No, miss.
sorry, into 365.
So average inventory is 30,000.
Okay. Cost of sales would be
So
opening.
300,000
I don't
in,
have purchases.
yeah, but you can do this thing na 300,000 into 20 upon 120.
Sales minus cost of
So
sales gives me
sales
gross profit.
gross profit.
Gross profit is 20% on costs.
Hmm.
So sales is 300,000.
Hmm.
So this is 1/5
One
on
upon five.
costs.
So it'll be
1/6
1616.
on selling price.
Hmm.
Yeah,
So gross profit is 50,000.
50,000. So cost of sales would be
250,000.
250,000. So average inventory over cost of sales into 365.
Hmm.
So this would become how much?
43.8. So 44.
44 days. Farhan, are you getting the same answer?
yes, miss. I've done it in my calculator.
Okay,
B.
fine. Read the question, Ira.
H Limited uses ratio analysis to analyze its financial performance. On 31st January 2021, the company prepared draft financial statements before it revalued its premises upwards.
So when you're revaluing your premises upwards, that means your non-current assets are valued upwards.
Hmm.
So your what does your non-current asset turnover ratio tell you?
How many assets?
Efficiently, you're using your non-current assets to generate revenue.
Okay.
Okay. How efficiently you're using your non-current assets to generate revenue.
Hmm.
Now, you revalue your non-current assets upwards. That means you are increasing your non-current assets, but the revenue is still going to remain the same.
Hmm.
So your non-current asset turnover ratio will decrease. Revenue is still going to remain the same. That means your return on capital employed
Yeah.
is going to decrease because your total assets is going to increase, but your return revenue remaining the same. Your return on capital employed will decrease.
Hmm.
Okay. So the answer is option A. Go to the next one. Come on.
What is the trade payable turnover in days?
So one sum Farhan solve and keep, one sum Ira solve and keep. Okay. So skip one.
Okay.
So I will do one with both. Ira, come on, give
Okay.
me trade payable turnover ratio.
Okay, so trade payables upon credit purchases into 365.
What is
So
trade
trade
bills?
90,000
Purchases.
to 70,000.
All purchases are on credit.
Yeah.
So what is the trade payable turnover ratio?
121.66. So 122.
Okay, option C.
Yeah.
Farhan,
Yes.
come on.
Okay. A business buys goods for resale, paying by check rather than buying on credit. What effect will this have on the current ratio and the liquid asset test ratio? So, miss buying goods for resale and paying by check rather than buying on credit,
You're
which means,
buying
miss,
the goods.
yeah, buying the goods.
That means
So,
the
which
stock
means,
is increasing.
yeah,
That means your current asset is increasing.
yeah. And miss, it also means that current ratio would have no change
Why? Give me the reason why.
because, miss, it's
You're paying
increasing.
by
The stock is
check.
increasing.
Stock is
Yeah,
increasing, so current asset, current ratio should increase.
really?
Yes, really. So give me two effects of the transaction.
Okay. So,
Stock is
what I,
increasing, so current assets
yeah,
is increasing.
yeah,
And you're paying by check.
yes,
So bank is decreasing.
yeah. So it's gonna be B.
Current asset is decreasing.
Yeah,
One current asset is increasing and one current
yeah,
asset is decreasing.
yeah.
That means there is going to be no change in your current ratio. Are you with
Isn't that
me?
what I?
No, no, no. You just said that stock is increasing, current asset is increasing. That means no change.
Yeah, but wasn't I correct though? But the reasoning was wrong.
Correct.
The reasoning was wrong.
Reasoning is wrong. That means you're not correct.
It's MCQ. That's not theory.
Okay. Now come on, tell me the effect on the asset test ratio.
The asset test ratio. So, miss, the formula for asset test is current asset minus closing value divided by current liability. And since the current asset, since the check is decreasing, and so will the current asset, which means it's going to decrease.
Okay.
So it's going to decrease, right?
The numerator is going to decrease.
Yeah,
Numerator is going to decrease. That means your liquid ratio will also decrease.
yeah. So it's C.
It's option C. Come on, Ira.
Yeah. Wait a minute, hold on. I'll be back.
Ira, come on. Ira.
Yeah, sorry, I was talking on mute. So what is the non-current asset turnover in times? It
Hmm.
is net book value upon revenue. So
Net
net
book
book
value
value
of what?
assets, non-current asset,
Upon?
revenue.
Hmm.
So 400,000 minus 280,000
They want in times, right?
in time. So sorry, it'll be revenue as the
If it's
numerator.
in time, you will reverse the formula
Yeah, yeah. Revenue upon net book value
of non-current assets.
of non-current asset. Yeah.
So
So
what is
revenue
revenue?
980,000.
Net book value of non-current assets.
120,000.
So,
It'll be 8.166. So 8.17. D.
sorry.
D. 8.17.
Hmm. Go to the next one.
What ratio the efficiency ratio is?
Efficiency means what?
Mm, how quickly,
Efficiency, how quickly you can collect
yeah.
money from your
Hmm.
trade receivable turnover, trade payable turnover, inventory turnover,
Yeah, so inventory turnover is correct.
non-current asset turnover.
Okay, so 2 and 3.
Hmm. Next one.
What was the company's sales revenue for the year?
Hmm.
They've given us closing inventory,
Sales
increase inventory.
minus cost of sales is gross profit. Yeah.
Yeah,
Gross profit is 200,000.
yeah,
Cost of sales, I don't know.
no.
Neither I know the sales.
Yeah, we don't know.
But I know rate of inventory turnover.
And you also know that
What is the
uh,
formula of rate of inventory turnover? It's a time.
cost of sales upon average inventory.
Yeah. Inventory turnover ratio is 8 times. I don't know my cost of sales.
Hmm.
Opening inventory,
Opening, sorry.
yeah, average inventory. So I know my closing inventory, 30,000.
Yeah.
Increase in inventory from the start of the year, 50%. So if I started my year with 100, I have
Yeah.
reached to increase in inventory,
Hmm.
150.
Hmm.
So if my closing inventory, 150. If my closing inventory represents how much? 30,000. So how much would be the opening? Yeah?
Yeah.
So 150 represents 30,000.
Hmm.
So how much would be the opening?
20,000.
30,000 into 100 divided by 150.
150.
20,000 would be the opening inventory.
Yeah.
So average inventory is 25,000.
Yeah.
So cost of sales is 25,000 into 8,
Great.
200,000.
Hmm.
Cost of sales is 200,000. So
Yeah.
sales will be 200,000.
Yeah. Will be B.
Option B. Is Farhan back?
No.
I don't think we should do ahead because they are all easy sums.
Hmm.
So you should try it by yourself.
Okay.
Okay.